Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDR.
Half of the KC processing a launch.
Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front. Malaysian equities opened slightly higher this morning before slipping into minor negative territory during early trade as investors moved to lock in gains following the benchmark index recent string of advances. The benchmark FBM KLCI opened 2.83 points higher at 1,749.65 before easing 0.78 points to trade around 1,747.39 at 9:16 a.m. Local market movements come despite a mixed overnight session on Wall Street, where the Dow Jones Industrial Average closed at a fresh record high of 54,349.06 on optimism surrounding US-Iran peace talks, while the S&P 500 and Nasdaq Composite edged lower. Consumer and utility heavyweights provided early support on the local exchange. Nestle led the gainers, advancing 50 cents to 103 ringgit, followed by Petronas Gas, which added 16 cents to 17 ringgit and 60 cents. Telekom Malaysia gained 10 cents to 8 ringgit, while digital solution provider Data Edge climbed 7.5 cents to 62.5 cents. In contrast, technology and semiconductor counters faced noticeable profit-taking pressure following recent run-ups. Malaysian Pacific Industries fell 44 cents to 46 ringgit and 50 cents. KESM slipped 8 cents to 4 ringgit and 28 cents. Vitrox lost 5 cents to 9 ringgit and 5 cents, while Franken and Pentamaster retreated 4 cents each to 5 ringgit and 17 cents and 5 ringgit and 66 cents respectively. Commenting on the market trajectory, Berjaya Research noted that while the FBM KLCI remains vulnerable to near-term profit-taking, broader market sentiment is expected to remain constructive, supported by resilient domestic economic fundamentals and improving corporate earnings prospects. Technically, the research house pegs immediate resistance levels at 1,756 and 1,770 points, with key near-term support held at 1,732 and 1,720 points. Meanwhile, Rakuten Trade highlighted that easing geopolitical tensions, lower crude oil prices, and sustained buying in index heavyweights continue to provide underlying support for the local market. Moving on to our local currency and foreign exchange. The Malaysian ringgit opened slightly firmer against the greenback this morning, supported by improving market sentiment after weaker than expected economic data out of the United States placed downward pressure on the dollar. At the opening bell, the local currency strengthened marginally to 4.0905 to 4.0960 against the US dollar, recovering from Wednesday's close of 4.0920 to 4.0960. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzanizam Abdul Rashid noted that softer US labor and services figures pushed the US dollar index down 0.18% to 99.676. Specifically, the ADP non-farm employment report showed just 44,000 jobs added in July, missing consensus expectations of 68,000. Additionally, the ISM non-manufacturing index printed at 54.1, coming in below forecast. At the same time, Brent crude prices hovering below $80 per barrel, driven by potential geopolitical progress around the Strait of Hormuz, are expected to keep the ringgit trading within a narrow range between 4.07 and 4.09 today. Global market strategists at Quintex Intel noted that traders are currently entering a cautious 48-hour window ahead of the upcoming US non-farm payrolls report, leading to portfolio rebalancing and range-bound trading across emerging market currencies. Across major cross rates, the ringgit traded mostly lower at the open. The local unit slipped against the Japanese yen to 2.5942 and fell against the euro to 4.7266, but recorded gains against the British pound to trade at 5.5087. In regional trade, the ringgit moved lower against the Singapore dollar at 3.1932 and the Thai baht at 12.3655, while edging higher against the Indonesian rupiah to 228.0 and remaining flat against the Philippine peso. Now for some national news. Speaking at the RHB Progress Series 2026 in Kuala Lumpur today, Finance Minister to Datuk Seri Amir Hamzah Azizan emphasized that while the government's role is to maintain policy certainty and a credible fiscal framework, the private sector must take a more proactive role in pricing risk and funding business expansion. Amir Hamzah noted that public capital is designed to unlock markets and build baseline predictability, but commercial banks, venture capital firms, private equity players, and institutional investors must supply the funding needed to scale new technologies and business models before their success becomes obvious. He outlined a seamless capital continuum where venture capital absorbs early risk, growth equity finances expansion, bank loans support maturing cash flows, and public equity markets provide exit liquidity and long-term capital. Institutional initiatives such as Khazanah Nasional's Jelawang Capital Fund of Funds and KWAP's Dana Perintis are increasingly crowding institutional money into early-stage domestic startups. Highlighting that Malaysia's global sukuk issuances demonstrate strong international investor confidence in sovereign risk, Amir Hamzah challenged domestic financial institutions and fund managers to build the internal capacity required to evaluate, price, and back promising local companies earlier in their growth journey. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Gamuda Berhad's newly secured 1.71 billion ringgit hyperscale data center contract in Port Dickson is expected to deliver a higher pre-tax profit margin for the construction group as its financial year 2027 job replenishment gets underway. Hong Leong Investment Bank Research noted in a client update that the contract marks Gamuda's first major win for financial year 2027. Similar to the group's prior data center packages, HLIB expects the project to yield a pre-tax profit margin of approximately 8% on a cost-plus structure. With this latest win, data center developments now account for roughly 10% of Gamuda's massive 54 billion ringgit unbuilt order book. This project represents Gamuda's second data center package at the Port Dickson site, owned by a US-based multinational tech client. Analysts highlight that subsequent phases for the site, entailing an additional 6 to 7 similar-sized data center units, could become available following the completion of surrounding water infrastructure works between 2027 and 2028. Gamuda concluded financial year 2026 with 25 billion ringgit in total contract wins. To maintain its unbuilt order book target of 50 billion ringgit by the end of calendar year 2026, HLIB estimates Gamuda needs to secure an additional 5 billion to 6 billion ringgit in new jobs over the remainder of the year. The research house considers this target highly achievable, pointing to near-term opportunities including the 4 billion ringgit Northern Perak Water Project, Australian renewable energy packages, the Penang LRT systems contract, and rail projects in Taiwan. HLIB has maintained its buy recommendation on Gamuda with an unchanged target price of 5 ringgit and 27 cents. While earnings growth in financial year 2026 remains steady due to early-stage project execution, the research house expects earnings recognition to accelerate significantly from CY27 onward as major order book components enter their peak execution phase. Up next, we have a market update. RHB Research has revised its target price on logistics solution provider Tasco Berhad downward to 62 cents from 66 cents, cutting earnings forecast for financial year 2027 through 2029 by roughly 7%, following a weaker than expected first quarter performance. Tasco's core net profit for the first quarter of the financial year 2027 fell 29% year-on-year to 7.2 million ringgit, accounting for just 15 to 16% of consensus full-year expectations. RHB Research analyst John Liu highlighted that the shortfall was primarily driven by softness across ocean freight, forwarding, contract logistics, and cold chain operations. Vessel space shortages stemming from Middle East supply chain disruptions constrained ocean freight volumes, prompting high-value data center shipments to shift toward air freight forwarding, which performed above expectations. Contract logistics and cold chain operations face additional pressure from reduced customs clearance project volume and the loss of a key client. However, operational expansion is set to mitigate these drag factors in the second half of the financial year. Newly completed logistics facilities at Shah Alam and North Port added a combined 700,000 square feet of capacity in June. Operating fully from this month after replacing 370,000 square feet of legacy space, the consolidation is projected to generate monthly cost savings between 200,000 and 300,000 ringgit. Management also reaffirmed guidance for an effective tax rate below 20% for financial year 2027, with the main impact of the integrated logistics services tax rebate expected in the fourth quarter. Despite near-term earnings adjustments, RHB Research notes that Tasco remains attractively valued at approximately 8 times forward earnings, below its 5-year historical mean of 10 times. Today's major corporate developments and deals across Malaysia. We begin with strong corporate earnings in the technology sector, where semiconductor service provider Franken Corporation reported a sharp profit expansion for the second quarter. Net profit rose 42% to 47.72 million ringgit from 33.49 million ringgit a year earlier, while revenue grew to 186.91 million ringgit. For the first half of the year, net profit climbed nearly 40% to 90.08 million ringgit, driven by robust semiconductor demand and expanded operational contributions from its Malaysian and Taiwan facilities. In contrast, consumer demand pressures weigh on Heineken Malaysia during the second quarter. The brewer's net profit fell to 50.5 million ringgit on reduced revenue of 434.7 million ringgit, impacted by softer consumer spending and channel inventory normalization. For the first 6 months of the financial year, net profit stood at 155 million ringgit on 1.1 billion ringgit in total revenue. Turning to property development and construction activity, Nescon secured a major 243 million ringgit contract to build a 57-story service apartment development in Georgetown, Penang, with construction slated to begin in January 2027. Meanwhile, Sarawak Consolidated Industries Berhad backed a 24.59 million ringgit subcontract for the reconstruction of Sekolah Kebangsaan Kaingaran in Tambunan, Sabah, commencing later this month. In industrial expansion and capital expenditure developments, Kellington Group announced an investment of 120 million ringgit to construct a merchant air separation unit plant in Maharashtra, India, targeting completion by the third quarter of 2028. Precision engineering outfit CPE Technology will invest 31.02 million ringgit to acquire new machinery and a freehold industrial property in Johor to expand manufacturing capacity. Rounding on today's corporate updates, offshore services provider Alam Maritime's indirect unit is acquiring a $3.24 million remotely operated vehicle to strengthen its subsea engineering fleet, while integrated engineering specialist Destiny won a long-term tubular running services contract from Searah, Malaysia, running through March 2031. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.